Hello and welcome to another episode of the Modern Practical Guide to a Positive Full Life Now, aka the Selfish Guide, with your host, your go-to friend, me. Today we have a special episode. I have a very good friend of mine, Mathi, here, and we're going to be talking about the investment video, and she's going to have some questions to follow up with in hopes of shining new light on investment and different perspectives. And with that, I'm going to give it over to Maddie. Please introduce yourself.
Yeah, hello. I'm Mathi. I'm French and I live in Barcelona. And yeah, we met long time ago with Carlos, and I'm happy to be here to go through this video and this talk. So I'm a personal trainer, and you can go to my web mathimisho.com, and I give online classes, and also here in Barcelona where I live, I can give like one-to-one sessions, and yeah, I went through the video like on the Carlos channel to to see, and I picked one about money because it's a really special topic for me, especially now with this professional project. So I was really interested about this topic and how to invest once you get your savings. And so yeah, that's why I'm here, and to talk about this and go through the questions.
Thank you. And again, it makes a big difference. I know I always say this way too much, but I truly value people's time. And I think time is the one thing that is the most valuable to give. And so I greatly appreciate you doing this. And I can't express enough how much gratitude I feel for you taking the time and doing the video with me. Without further ado, if you could please read the first question you have on the lesson video.
Yeah, the first question was that in your video, I understand you recommend compound investments. And I wasn't sure to understand what it is, so I wanted to go through this again and why it's better option compared to the rest of investment options.
So it's a great question. And I think it's one of the simplest, it's most confusing aspects of finance. And it's simple. I think the best way to think about compound interest is like a regular savings account. Let's pretend you have 100 euros, right? You have a savings account and you have your investments set. Pretend for the sake of math that every year you make 10%, right? The first year you would make 10 euros, right? So you would have 110 euros. Compound interest makes a point that the next year you're not going to make another 10 euros. You're going to make 11 euros because you're going to make off of the interest as well as the initial you had there from the year before. Now, just to give you an example, like I said, the second year you're going to have 121 euros. But in 10 years, you're going to have 611 euros with 59 cents, or I don't know, is it cents in euros? But in 30 years, that same $100, assuming you just get 10% every year, that's 1,586 euros. It's still the same 100. But as you can see, compound interest, it does really well with time. I always joke, and I don't know if it's true, but they always say that Einstein, when asked what the most powerful force in the universe was, he didn't answer black holes or dark matter. He said compound interest. Because compound interest is incredible in the sense of over time, it's just your money makes so much money from the money it made initially. And that's what it is in short. It's not the money you make from your initial, it's the money that your money makes from the new money it created, right? So when you get interest, that interest will make money. And as you go along, that interest doubles, triples, and like in this situation, you have 15 times more than what you have, actually more than that. But it just compounds itself and it grows. And so it's a term that references that interest and how it grows over time. Because of this, I always recommend start early. And I know I probably make lots of videos about now, but with money, I truly believe that if somebody wants to create wealth, then the best thing to do is to have assets. And you want those assets to compound. That's what it is in simple terms. So compound interest is just using the interest from your interest that you gain over time. Does that make sense?
Yeah, better.
So my recommendation to you in reference to common interest is try to get assets. And assets, in my opinion, there's a lot of things that aren't assets that people think they're assets, like a car. It's not an asset, not in my opinion at least. And it could be arguable. House even could be argued even further, but I would argue it's not. If you're living in it, it's not an asset, right? An asset is something that is making you money. And at the end of the year, you can choose to do whatever you want with the money. Ideally, what you do with the money you make to take advantage of compound interest is you reinvest that money. And there's financial instruments where you can automatically set the setting. So whatever money that stock or that fund makes will automatically be reinvested into that fund, and then you make more money. So that's what compound interest is. Did you have any follow-up questions?
Do you have an example of like typical assets you have in mind? Like
Typical assets, they could be anything. And this is where I come down, and you ask another question that we'll get to. There's a lot of things you can do. Now, I would say it really depends on your level of time you can give and understanding and just learning you want to put in. Because again, like your personal trainer, if you want to learn how to give a certain number of classes, you're going to have to put in the time to learn it and then teach it, right? If you don't find it interesting and you don't believe in it as an exercise, you're just not going to invest the real time. You're going to wander. You say, yeah, I want to learn that. And you just never get around to it. And so with that, I would say, try to invest in things that sound interesting to you, that sound fun to you. And if nothing sounds fun in finance, then I would tell you to look into mutual funds that, or just year-end funds. For example, and I'm not endorsing Vanguard, but Vanguard is a perfect example. What they have are end-year funds. And what they mean is, let's say I want to retire 2050, right? You can buy a fund. And what it does is initially, right now when it's early, they're going to make investments in stocks and in riskier things. Midway, they're going to start buying more bonds, things that are more secure. We're talking about going from like things that are risky to less risky. And by the time I retire, it's going to mostly be in like government bonds. And government bonds from a AAA entity are pretty much like getting a savings account. It's, I mean, a country can go belly up, but it's like saying if you have a US government bond, you're pretty much betting that the government of the United States isn't going to go under. You can do the same thing with France. You can do the same with Spain. Now, someone would argue that's a risk, true, but I would say that it's, I mean, it really, if the whole government in a European country goes belly up, we have bigger problems on the global standing. So I would say, don't worry about, that. But for example, that's a very good way where you can select in those type of investments, you're going to reinvest your money. And so what you do is you put in, maybe once a year, you put in whatever money you've saved up, and then you buy that fund. And then what it does is automatically, with the money it makes, puts it right back into the investment. And the investment itself changes over time. So that the way that works is when you retire, you don't want to be invested in stocks and riskier things. Because for example, let's say you were going to retire in March and COVID hit. Well, you're going to be very screwed. Why? Because all of a sudden you had $1 million in savings, and now you have, what the market fell like a lot. So you could potentially lose 30-40% of the money you have like that in an instant. You don't want that. So a fund like this, what it does is it changes it so that you have very secure bonds, like government bonds, at the end of it, where you can say, hey, I got $1 million, it's not going to change. And that's good. I would recommend that to somebody who is scared, who doesn't want to invest any money, mainly because right now it's critical to invest your money. There's never a better time than the moment right now. That's a secure, easy, and again, I'm not going to make any argument to say this is going to make you rich, but this is a solid investment that's going to get you very good returns and is going to use compound interest. And like I said, the idea with compound interest is as early as possible. Right now is always the best time. I started investing when, I in college, $100, here and there, and it wasn't much, but I can see the money, it has grown a lot, and it's only going to continue to grow. And some people are concerned with the stock market, saying it fluctuates, blah, blah. But if you look at the overall trend of most stock markets, especially the US market, there's always an upward trajectory. It dips, it does crazy things, there's always an upward trajectory. So if you bank on that, you're going to be getting, in the US, it's 7% of roughly every year you get. Even when you calculate the Great Depression, all these falls with COVID, everything. That's about average. So you can bank on getting 7% relative to the investment. And as you switch, you're going to get less because the bond's going to give you 1 to 2%. But like I said, at that point, you've already made the initial compound massive from your initial and middle. And then at the end, you don't really want to be making a lot of money because it would entail too much risk. And if you retire at that time, you might have half of what you started with, and it's too much of a risk. Does that make sense?
Mm-hmm.
Um, so to your question, I mean, it depends on what you're interested in and how much you want to invest time in and how you feel relative to this. So it's up to you. I would say the best investment is the one you feel comfortable making, but make something. Don't be so scared that you don't make any investment or don't put it off because, like I said, time is the best thing we have when it comes to investing money. Because when we're young, you make a mistake. Even if you lose all your money, it's gonna be like if I would have lost all my money the first year I invested, it would have been $100. Relative to my life and where I'm at right now, it wouldn't affect me to lose $100 when I was, in my young 20s. And now, if I lost everything I invested in, it would be a lot more drastic. So try to use earlier times and less funds. And if you do want to, like, what I find very interesting is computers and AI. And so I make investments, but they're small, right? They're really small, and they're like it's like I tell people, I'm not against trying to make it big, but I'm all for making the risk relative to what you feel comfortable doing. And if you don't feel comfortable gambling $1,000, then I wouldn't put it in something that is you don't feel is a solid investment. So I would put maybe $100 in something that I felt like, oh, this company might really come along with with AI or something of the sort, and that's fine. And if I lose it, it sucks. But I could make. I've done really well. I've had some random funds that I invested $100 and have made me like thousands of dollars. But and I always say, oh, if I would have put in $1,000, I'd have $100,000 right now or something crazy like that. But you can't bet on them. I think the everybody wants that, but the most secure thing for you to do is to make smart long-term investments and use compound interest to your favor.
I wanted to know what do you think about cryptocurrencies?
Cryptocurrencies. I think it's a very good question. It's a question that everyone's on their mind. I would say that me personally, I can give you my personal thing, but I'm not a financial advisor. But I think in general, with new things, I would say that it's dependent on your understanding. Cryptocurrencies I've read a lot about, and they're simple but very complex. What they're based on and how they work are rather complex, and they're very contingent on what society values them at. Um, and some would say that's great because you don't have an entity that's contingent on the value of such thing like the U.S. and the U.S. dollar. Others would say, well, that's really risky because if people all of a sudden think that it's not worth something, that could fall very drastically very quickly. My problem with it is it's all over the place. There's a lot of different ones, and I've read so many accounts of ones that people go and they're like, I'm going to create the perfect one that doesn't have all these problems that the other ones have. And something happens and it goes badly. Unfortunately, I think when it comes to money, there's just, because it's something created by individuals, it's not like a government trying to make something, there's just a lot of chances for it to go badly. And even when their owners have the best intentions, there's other people in the background that are trying to not do things. Again, that's just one example that I can think of. But at the same time, I wouldn't put it off. If you feel like you want to make the investment, like I said before, I would recommend you investing what you feel comfortable losing. And I know that sounds weird, but if you feel comfortable putting 100 euros to it, then put 100 euros to it and do a little research, and because it makes you excited. I say the secret to like exercise and the secret to investment is to feel excited about it. If you don't want to go exercise because it's boring, then you're not going to really be motivated to go and exercise. If you're like really like to swim or really like wakeboarding or whatever it is, you're going to be more excited to go and exercise. The same thing with investment. If you aren't a little excited about it, it's going to be hard to motivate you to go and actually make a transaction and do a little bit of research. So I would say to do your own research and invest whatever you feel comfortable losing. I think if for diversification's sake, it might be worth having a little there so that, if markets fluctuate, you can retain that value there. But I wouldn't put much in it personally, but there's lots of accounts of people who heavily invested in it, and it's turned out very well. When I thought of investing in it, it was actually roughly 6 years ago, and at the time it was I think I could have bought it at like 3,500 or something like that. So I would have made quite a bit of money if I would have just bought one. I was considering just buying one, and I at one point, reached 20,000, so I could have made a pretty penny. But um, to to make my point, you can be very, very fortunate in your investment, but with anything that's new, it's just really hard to tell. The regulation's just starting, how they tax it, how it works. And like I said, it's rather complex when you really break it down. So I would
Mm.
tell you to, if you find it exciting, do a little bit of research and definitely invest something in it. But I wouldn't put all your investment in it. That'd be my recommendation. But again, I'm not a financial advisor. It's just from my knowledge. Does that make sense?
Yeah, it makes sense. I mean, my problem is like I'm not excited in general about investing. I try, and sometimes like, okay, you have to look what to do or find, yeah, maybe a comfortable way to do it. And until now, I didn't, because the only way I had was like just retirement funds when you have like regular contract working in a company. So
Mhm.
it was like this when I was living in Chile, and I ex- I said before. I mean, I said when I explained you, um, it's the place in the world I've been living the most and where I accumulate more funds for my retirement, like as an investment. And it's the only amount I have, and it was really hard to get it back. But now I have it like just in my account. It's like, okay, what should I do with this?
Yeah, I like I said, my recommendation is it's amazing what you can invest in. I definitely follow what I told you initially, but more recently I've been diversifying a little bit. I mean, the bulk of my investments still go into big funds like the ones I described before. But what I do is, I find that, for example, Tesla, right? It was exciting a few years ago, and I buy it because, I see people buying cars. It's exciting. The owner's eccentric, and it's just I found it exciting, so I bought it, right? And it's done very well. But there's also other. But so what I'm trying to get at is there's got to be something you're excited about, right? Like I like to, if you like to take cruises, invest in cruise companies. Maybe right now, maybe it's actually good because they're all dirt cheap, but some of them might go out of business. But my point being though is if you like training, you can invest in companies that do training, right? That do training online, do training at home, do specific type of like um, equipment for training. So I always say, people, you know what you want to invest in, and it's like somebody who swims a lot. They're like, oh, I really like this brand. It really speaks to me. I buy only this brand, and I'm like, well, why don't you look into that and see if you can invest in that brand, right? If they're publicly traded, then invest in it because it's exciting, right? And you're like, I don't just own their cap and their nose clip and their earplugs. I own a piece of the company, and so it makes it more exciting. And again, I'm not saying put all your money in this one company, but I'm saying if you do a little of that, it makes investment just a little more palatable. You get a little more excited, and you can see it. And like I said, I wouldn't put the majority of stuff like that because they're really on a whim. It's a gut reaction. You can definitely do research, see how good the company's financials are, but most people who aren't into that won't do that. And so I would say that you can do that to some extent to get excited and want to make investment. But the bulk of it, like I said, if you really dislike it, you can just put it in an end-year fund. And that's going to be better than it sitting there. The thing that you have to understand is if you leave your money in an account, and right now, savings account, the max you're going to be getting is 1%, right? The problem with this is inflation. Countries want inflation. I know it sounds weird, and I'm not going to go into it, but inflation is a good thing, right? And at least the way the world is right now, economically, inflation is a good thing. But what inflation means is if you have 100 euros and you put them underneath your mattress or you put them in your bank account, You could take two out and just burn them, because that's what happens in the year. You lose 2% of that, and that's good. Other countries, inflation could you can lose a lot more. But the problem is, let's say you put it in a savings account. It only gives you €1 at the end of the year. You burn two. So you might as well take €1 out and burn it. And that's the thing. You want to be making more money than the inflation. And when you think about that, right, when you take inflation into consideration, let's say you made 7% of this year. You have to then consider the inflation that you had in your country and subtract that relative to what your buying power is, right? So you really made 5%, if you want to be super realistic in reference to the power that your money has. For that reason, you need to be investing. If not, you're actually losing money. So I would just make sure that no matter what you do after you hearing me, is invested in something. And ideally, if you could find a savings account that's giving you 3%, and you're really lazy and you don't want to think about it, then do that. At the very least, you're not going to be losing money. But if you can't, then try to make investments and try to look into making investments that you're a little excited about, but at the same time, things like I said that is going to make it easy for you and not make it a headache. You don't want to see it like I'm going to pull out my teeth, because then you're really not going to
Okay,
do it.
I'm from France, but I never worked there, so never started like to invest. And then I was in Chile, and I had my funds, so I get them back, and I'm in Spain, but not for that long. It's like, okay, where? Okay, I'm confused. Where? Like, I know everything is possible, but at the same time, it's like I don't have something like so fixed, like, okay, I'm French, I'm in France, and I'm gonna go invest there, or I can invest in any kind of company or actions or whatever. Like, I don't know if you get my
No,
question,
no,
but like,
I
but I
completely
think you kind of answered it before, like,
Well, actually, what I was going to say in reference to that is, considering abroad is very, very unique in the sense of the investment possibilities get very complicated. What I would tell you is, one of the questions I would ask is, where do you think you're going to retire? Where do you want to be when you're older? And if you have no idea, that's okay. But if you do have an idea, then focus there. If you foresee yourself being in France, and look at that and try to see what investments you can make there, what the government offers, what you can read a lot online, blog people recommendations. Um, but if you don't have any idea, my recommendation to you is, you're doing relatively well, right? Because a lot of people don't save. You're saving, right? A lot of people like to just stick their head in the hole and just ignore that, they have money just sitting there. You want to do something about it. That's very good. And at the same time, you're taking the time to understand things, and you're trying to make an intelligent decision with your money. That's also the next step. So that's very good. I would say that because of your situation and it being complex, I would highly recommend you looking into talking to a financial advisor. I know it sounds scary, it sounds really complicated, but just sit down and have one session with them. And these people, and again, look up your country, look up a little bit about financial advisors. Some countries make it a little complex where, they're not really financial advisors. They just have titles that say that, but they're actually trying to sell you something. It really depends on where you're at and in what country
yeah,
you're. I don't really understand, or I never knew anything specific to Spain or France, so I couldn't speak to that. But just make sure that the financial advisors, they're certified, if possible, and that if not, that they actually have a title that is set to help you. What the main thing you want to look at is, you don't want to have a free meeting. That's the way I look at it. If someone says, "Come, I'll talk to you for free," I wouldn't do that. I would go to someone who says, "I charge this much an hour." And I know it sounds daunting to be like, "I'm gonna pay you, $50 an hour to just sit and talk to me." But I think that's what you need. You tell the person, "This is how much I make. This is how much I have to save up. This is, my citizenship. This is where I'm resident. I don't know where I'm going to end up. I don't know this." And then they can give you a recommendation to what investments. And you can tell them, "How comfortable do you feel making investments?" You can be like, "I'm young. I'm okay taking really high risks right now. I want to, as I grow older, to move those investments and be able to put them in less risky things." And that'll tell them, "Okay, you don't want to make a risk investment for a long term. You just want a risk investment in the next couple years, 2 years, 5 years." And you can have a conversation, and they're going to be able to give you much better recommendations. The only problem there is, you're going to most likely have to do it in Spain. because that's where you're at. But and I think if you pick the right one, they're going to be able to make recommendations based on you having citizenship in France and having the funds that you have and not really knowing where you're going to end up. So you're going to get a better recommendation. I would suggest doing at least one meeting. If you find it very useful, you can have annual meetings with them. You can pay them to invest your money. But my point being is just have one meeting. If what they should be doing is enlightening you, giving you options, and then they might try to get you to hire them. But the thing is, you're going to have a very good overview of where you stand in your options. And if they're, worth anything, they're going to give you smart investment ideas so that you can figure out what works for you.
Mm,
It's just we've
okay.
reached that age where you kind of have to spend money to make money, and it's
So I think now my main um, problem is to find like the right person because again it's something I'm not used to it. So
yeah.
just by looking on internet, I was like, okay, I'm not sure where to go, who to meet. Like I feel I need recommendations. So probably I'm gonna ask people like if.
That's a great way to start. I think that think
Mm.
about talk. I think we don't talk about money enough, right? I think
No, because I mean, you can ask people like where to go to the psychologist or to whatever, like a lot of stuff, like or like for medicine and like something specific for the body or whatever. But for this, I never hear like, hey, I have a great financial advisor, like go see him.
no, and I think that's the problem. I think conversations like this is what we need more of. So I can give you how I invest, and you can be like, I don't really feel that. It doesn't make sense for me. And then you could talk to someone else and be like, that sounds a little more like me. I would always say if you are going to take advice from somebody, if they're a friend, it's just make sure they're emulating or something that you want, right?
Mm,
Because a lot of times, I'm not going to speak poorly about people in general, but sometimes people like to pretend they have lots of money. And then when you lift the hood up and you start asking very specific questions, you realize they're heavily in debt and they have no investments. They just spend money. And so you think, oh, this person's really well off because they're spending lots of money, but they're spending lots of money um, by borrowing. And so that's not a good thing. And they could tell you all the advisors you want, but I wouldn't go to them because clearly an advisor sucks or is not empowered to be able to make good recommendations and get them to do it because they're making bad decisions, in my opinion, right? Doesn't mean they're a
mm,
bad person. I'm just saying in reference to this. So I think the only way you're going to be able to decipher who is a good role model and who you want to go for advice is to talk about it more with people. And so, yeah, I would highly recommend you talking to those individuals that you think are doing well and getting specifics in reference to it. And again, I'm not saying, I made this much money this year, but you can be like, roughly what percentiles do you bring back? Are you making 10% of your investment, 5%, 1%? And is that unusual you made 1% this year? Or is that like because it's a bad year, And you can have those
mm,
conversations. And the more comfortable you get, the better you get in reference to being able to decipher, okay, this person is someone that I can, want to get information from, get their advisor, figure it all out. Um, but I would say that just try one. I mean,
mm,
so many times in life, we wait, oh, when I talk to so and so, I'll figure it out. When I do this, I'll do that. I would say give yourself a day or give yourself an hour, a half an hour. If all you have a half an hour, say, I'm going to go online and I'm going to try to make an appointment with a financial advisor. At the end of it, if I can't get any information, I'm just going to go to Google, put financial advisor, and call the first person that comes up and have a meeting with them. And worst case, you're going to lose maybe $50 or whatever it is, but you're doing something. You're going to learn. You're going to be like, hey, that type of person I don't want. Or, hey, that was really useful. In life rewards those who do. So my recommendation to you is plan the next step. Have a clear next step and take action. And make sure you have, I like to call them emergency levers where you can pull them, right? And you say, like, I give myself half an hour, but I still don't feel like I've got anywhere. Well, it doesn't matter. I have this lever. First person that comes up, I'm calling and making an appointment. That's your lever you pull. It's like an
mm,
application, right? You can spend days doing an application, but you say, I'm going to give myself a day. At the end, whatever I have, I'm turning it in. You pull the lever. It's the same thing with this. Just make sure you do it because, like I said, time is of the essence when it comes to investment, and you want to make sound intelligent investments, but you don't want to stall and be there for years. I met people who are like, oh, once I figure it out, I'll invest. And I think you're losing out on a lot of money that you could potentially make it, even if you make mistakes along the way. Does that make sense?
Yeah, sure.
All
I
right.
think at least you convinced me to take an appointment with someone. I'm gonna make some research.
And like I said, don't feel like you have to be overwhelmed. Don't be like, oh, I have the whole bag.
No, but
No, like you
I
just like,
feel I have this in mind for a long time and I'm just not doing it because it's not exciting for me neither, in general. So now I feel like, okay, I can at least try and see if someone give me options I feel comfortable with. Because my own, I don't find any, or I don't feel safe, even if I have some idea.
and
So
if
it
you feel
just,
that way, then get a second opinion. Like I'm all for
yeah, of
like
course.
go and someone says make this recommendation, then you put it, okay, I want to look into it, and you go talk to someone else, and if they say the same thing, then you're gonna feel a lot better about it. So yeah, I think you're on the right track, and like I said, as long as you do it, you'll be fine. You'll be well off. And with that, I'll end the show. Thank you for coming. Thank you for taking the time. Did you want to say any closing remarks?
Um, I'm really, I'm really surprised. Like it was really more exciting than what I thought talking about investment. Sometimes I like to push like in some stuff I avoid, so it was good. It was really good. And thank you for your
My pleasure.
recommendation and your time.
My pleasure.